Hello, fellas. This is Forte. Okay, no face cam again. All right, get out your notebook and your pen. And the stock idea I want to talk about today will be tradable on Monday, which is on July 26th as market opens. And that stock is Walmart. It's good for day trading and swing trading, right? I usually buy a big position and then sell most of it at the end of the day and then hold the rest for swing trade, right? Walmart. Now we can see that it's on this gigantic. Now this is a quarterly chart, so you can't really it's a long time ago. Now you guys might be Forte. It's near all time high, and the stock is $142. It's too expensive. I can't afford it, or it's too expensive. I don't want to buy it. It's too high. Well, let me tell you, a stock is never too high. Okay, now the stock can be too cheap, and I don't want. But stock can never be too high, right? If a stock goes up, that just means that there are demand for the stock and less supply, which means the price goes up. And what do I like about the stock, right? If you look at it on the weekly chart, we can see that it's on a nice clean uptrend, right? We're above the 40, 30, 20 weeks moving average, right? And the only thing I don't like about it is that for a 30-week moving average, now it's like flattening it out, but it wouldn't be a big deal. Maybe it could cause some more selling pressure, but I don't think we need to worry too much about it. I think it's good enough for me to take a risk on this trade. We can see that the stock has made this huge pullback, right? Basically shaking out. Well, we know that it's a shakeout because afterwards it bounced back. So this shaked out most of the people holding the stock right here. And we also had a quick bounce. You can see that it might be a little bit hard to see, but we had a bounce upward, sold off, bounce even higher, and then we could just consolidate it. And it's just the shares are realizing, right? People that were holding it around this area, they're selling their stock, they're holding it. But the thing is that after people around here sold their stock around here, the price didn't fail at all. The fails actually hold really well. You can see that every time after a sell off, the price comes back. And we're in the middle of this 200-day, 20-day, 50-day moving average, you can see. But you can see that the 20-day moving average is starting to, which is the blue line, if you can see. It's basically coming back up sharply on the uptrend. So what does that mean? That means that the stock is coming back up, right? And if we look at it, one other problem I have is that the beta is 0.33, which means it doesn't move that that fast against the market. But you have to keep in mind that these kind of data statistics, they show you afterwards, after the move, right? If I look at a stock like ADSK, I think before I traded, the beta was 0.8, but now it's 1.4. So I think WMT Walmart can actually, it looks good. I think that once we're able to pass this point right here, the pivot point right here on the, I believe it was a Monday high. Yep, July 19th, the Monday high, it made a high price of $142.98. If we do break that, which will mean that Walmart will be breaking this little consolidation right here, right? If we break this little consolidation right here, the only problem we see is right here, that there are supplies right here where people sold off, but the thing is that this was how many days ago? This was during May, right? So relative to the people that bought over here, this little high that I made in May, they're pretty much they're not weak hands. I think they're like a weak supply group where if you think about it psychologically, right? I mean, candle charts, it's all about psychology. If the stock moves up and then we enter this area, what do you think the buyers or people that bought at this area will think? Oh, well, they bought it in May, so that's about 2 months ago, right? 2 months ago, do you think they will sell it to break even? They could, they might, or they might not, but we have to consider the fact that they might, so that's the risk. So it's possible that we get up there and then we see the sellers at this area start selling off, right? But the thing is that since we only peak up and made a little high for a brief moment, it's not really strong sellers. Possibly we get up and then we have a little pullback right back into this consolidation and then gets going again. And we can see that if you look at it at a very high, the earnings, right, it's not due until August 17th, whereas all the earnings are pretty much due next next week, right? It's not due in 3 weeks, so I think it has plenty of time to make a run. Even like you can even consider this as like a earnings run up play, and it trades plenty of volume. I think that's 7.9 million shares. That's a lot of volume. So basically, what we have gotten so far, the information we got is that the stock is on an uptrend. We can see that the 20-day is on a up, 50-day is on an uptrend, and the 200-day moving average caught up, and we close above it on what is it? On the Friday. If you look on the weekly chart, it pulled up a high of right here. I think it's March. Oh no, it's actually last year. Yeah, last year's December and November, right? It made a high of 152. So that will be our potential target, right? So that would be a 10 11 dollar move, which is I think it's a good move, where that's like 7%, 8%, right? And we're in it to make the money. Now you have to consider the risk to reward. So how do you want to play this? So because the target is like 10 points away, I want to make sure that my risk is like around $2. So I want the reward to be at least 4-1 or 5-1, right? Now how do I do that? How do I trade that? How do I create that sort of a scenario? We have to go down to the shorter time frame. I like to use a 30-minute chart. Easier to see as well. What I'm looking at right here, this area right here, is essentially this on the 30-minute chart, right? On the daily chart. Now it'll make it a lot easier to break down. We can see that on the day, I think it's 29th, I believe. On the day of 29th, yeah, on the 30th, the stock gapped up. Now there are people that bought it, and that's why you don't buy gaps. You see, it's completely waste of time. You have your money in here for like 20 some days, 30 days, 24 days, right? And the stock didn't go anywhere at all, right? And we even had a little shakeout. So if you were to buy this stock and you put your stop at the low of the day, you were gonna shaken out on this day right here. Let's look at the 30-minute chart right here. You were gonna shaken out right here if you had your stop at the low of the day where it gapped, or even right here, right there. It doesn't matter. You got shaken out, right? And the stock also got shaked out right here on the 19th to 20th. Now, how do we know it's a shakeout? Well, you know it after the fact, because or else it can just keep on going down. Like every time, if you just buy, every time it goes down, assuming it's a shakeout, you're gonna lose your money in the long run. Your money is not protected, it's not secure. This thing could just go down. But instead, we bounce back and then continue consolidating in this range right here, in this range. And if you can see carefully, it's a little bit hard to see. On July 15th, right? We also had a not really a gap up. We don't really know what happened. I assume that the stock gapped. We gapped into weakness and the stock started selling out. 3 days later, it had a shakeout and it recovered back immediately, right? Stock's a little bit choppy, but I think it's good to trade, right? I think it's completely fine if we get above this high right here. Now we've zoomed in a lot. That's how you break down a stock. Getting this high right here, if you look on a daily chart, that high is this high. So that's what I was talking about earlier. And that high is, now jot this down in your notebook, $142.98. That's where we want to get in for trade, right? Now, how do you decide your stop? Well, you decide, right? I prefer just a $2 stock on this thing. You can use whatever indicators that you like and, trade the stock. The market right now is making an all-time high right now, right? And Walmart hasn't really moved yet. Now that's that's the only bit of concern that I have, but I don't think it's a big deal. I think Walmart will be a laggard because during the pullback, as you can see, that SPY made or the Qs or like any market basically, it started pulling back on July 15th and 16th. Now if you look at the Walmart on July 15th and 16th, what did it do? It pulled back, right? But if you look at SPY, look at how much they pull back. Like right here, big candles, even another leg lower to the 50-day moving average. In contrast, Walmart had a pullback, and we did have a big pullback, but that day, how it ended it's a completely different story. If you look at, SPY, right? It came all the way down to this area to test the previous basically support. But Walmart, where did we pull back to? Nowhere. To the 50-day, immediately recovered. Right, we're still in this range of consolidation. And that's basically, that's why I think the stock is strong. It's not as weak as It's not weak compared relative to the market. And I think this will make a good trade for Monday and the upcoming week. Thank you guys for watching. If you guys like the video, please check the description. I'll put the stock and entry in there. And also my Twitter, twitter.com/ForteCharts. Give me a follow if you like my content, and subscribe to YouTube. Subscribe, please. Thank you.